to talk a little bit about regulators preparing lenders for HELOC transition. There was a lot of home equity line of credits that were taken out on properties when there's a little more equity that they had available. Now we're getting some of that equity back, but as we're building equity back, the HELOCs are a lot of them are nearing the end of their draw period. So on a HELOC, it's a dwelling secured line of credit against their home. Second mortgage, which provides majority of them are based on interest-only payments. And at the end of that term, when that term ends and they can't draw on the line of credit anymore, they're actually in a position that they need to pay that back in a balloon payment, or their payments are going to drastically go up. Now, most HELOCs that I know of, are almost all of them are on balloon payments. So if you took out a home equity line of credit and you've been making those minimum payments, which are interest only, there's going to be a substantial amount of money that you're going to have in a balloon payment, which means that it's due right now. So the Federal Reserve Office of Comptroller of Currency, the Federal Deposit Insurance Corporation, National Credit Union Administration, along with the Conference of State Bank Supervisors, acknowledge that both financial institutions and borrowers may be facing some challenges when that time for that HELOC or that home equity line of credit is ending its term. So they're coming up with some guidelines, and the guidance issued describes core operating principles governing management oversight on HELOCs during the period and describes components of risk management. It also highlights concepts related to financial reporting for HELOCs. So regulatory agencies, examiners will review financial institutions' end of the draw risk management programs to provisions addressing risk management principles. So financial institutions need to implement policies and procedures for managing HELOCs as they draw on the period of that draw time ends. Regulators expect risk management procedures to include a clear understanding of scheduled end of draw exposure and identification of high risk segments. That's the first one. Second, a full understanding of the end of the draw contract provisions. So transitions issuing such as payment changes, amortization options, debt consolidation options, and payment processes should be considered in the service systems and how they're going to evaluate that. Evaluation of near-term risk, accounts that have already had draws suspended because of borrower performance or collateral value issues warrant attention. So management should also evaluate borrowers making only the contractual minimum interest-only payments to assess their ability to make the larger payments that will be required. Fourth, provisions for contacting borrowers through outreach program well before the scheduled end of the draw period comes into place. Now, fifth, ensuring the refinancing, renewal, workout, and modification programs are consistent with regulatory guidance and expectations, including consumer protection laws and regulations. So really in a position to have modifications available, kind of like they've done with a lot of the first mortgages when consumers or homeowners ran into some financial issues. And if they're in a position that they can warrant and prove that they're in distress and can't make those payments, they were doing modifications on the first mortgage. So I think we're going to see a lot of that happening with your home equity line of credits. So again, if there's been some change of circumstances in your financial situation that you have not recovered from, and you're not in a position to come up with this large sum of money because you're in a balloon payment, or maybe if those payments are drastically going up and you can't afford it, with the proper documentation and going through the modification department with your bank, hopefully you'll be in a position to get that adjusted and make it to where it's in a position that you can afford to keep that HELOC at the lower payments and not have to make that balloon payment and not put yourself in a financial distress situation. So they're just really trying to help consumers that might have been in a position that they weren't expecting this transition to come with their home equity line of credits and help you to get out of this situation, because otherwise you're in a risk of losing your home. If you can't honor the commitment on a second mortgage that's attached to the property, then that would cause issues and could cause a foreclosure on your home. So it's great that they're looking out and really trying to protect this, as well as protect the lenders and issues that they may be having. So I think we're going to see a lot of the government backing, like we did on the first mortgages, to help as these HELOCs are becoming due as well. If you have any questions or need assistance in this arena, please feel free to give the show a call. Again, it's 1-855-400-1150. It's 1-855-400-1150 or online at themoneyhour.com. And even on that note, if you're having concerns about your first mortgage, I know there's a lot of things that are coming up with adjustable rate mortgages as well that are becoming due, and really great interest rates right now in refinancing on an adjustable rate mortgage to get into a 30-year fixed rate mortgage. What you don't want to do is you don't want to miss out on that opportunity, because a lot of adjustable rate mortgages are going down because of where the LIBOR, a lot of you would probably be on a 12-month LIBOR index right now. Not to be fooled by that, because it's just fixed for another year before it's going to readjust again. So you may want to really consider taking advantage of the 30-year fixed rate mortgages if you're planning to staying in your property. Anything regarding mortgage, that is my arena. That's what I do day in and day out when I'm not here sharing information on a weekly basis on the radio show. So feel free to contact me and connect with me with anything that I might be able to assist you with. And coming up next in the Money Hour, don't miss out on your dream home ownership because you've missed out on the opportunity available in today's real estate market. Very excited to talk with Sam DeBoard with Coldwell Banker Danforth right here on 1150 ANKKMW after this short break.